One of the things, last thing here, Daniel, is IBM. Did you see those numbers?
I did, yeah. That's like Wall Street's favorite whipping boy. That's hilarious. They was good though. They were finally solid. Now, they didn't grow a whole lot when you back it out of X currency, and IBM's famous for your GAAP and your non-GAAP reported numbers and the one-offs that seem to reoccur every quarter. But yeah, they are a favorite whipping boy of Wall Street. But I thought it was pretty damn good. Red Hat, the acquisition, was growing 20%.
20%.
That's solid.
I'm just going to say a few things for you guys, okay? Because it's difficult to hate IBM, okay? Because IBM, old company that, let me tell you something. Cloud now accounts for more than 50% of profits. Okay, this is an old BS.
Sorry, 15 or 50?
50, more than 50% of profits. It's a massive high margin business, right? So, revenue is 30%, but margin, when you're looking at earnings, it's an incredibly high margin business. Why Amazon is a $1 trillion company, so Microsoft, Google, it's the cloud that really took them to the next level. That's their biggest growth engine. So now IBM is clearly getting business through the cloud in their hybrid model, right? So earnings per share projected to grow at 18% annually over the next 2 years, much faster than the overall market. The stock is trading at 13 times forward earnings. People still hate it.
Man.
And it pays a 4.5% yield, which is perfectly safe. They said, $11, $12 billion in cash flow they expect to generate. I mean, you have a high yield in an environment where you're looking at low interest rates for forever, right? Forever. For a very, very, very long time. And you're getting a nice yield on a growth company that's growing faster than the market, that's trading at pretty much...
Hell, it's still $40 cheaper than it was in 2017.
A massive discount. If you're looking at the cloud industry, they're trading at 25, 27, 30 times plus. This is 13 times. I mean, IBM is a cloud company. It's where cloud goes. Cloud did great, the stock went high. If cloud doesn't do great or the C-Slow grow, it's not going to do good. But with the Red Hat acquisition, it's working. Going fully integrated into cloud, hybrid, they think it's a $1 trillion market. But I don't know how you would short IBM here when you're looking at cloud accounting more than 50% of profits. Again, earnings per share expected to grow much, much faster than the market, 18% annual in the next 2 years, 13 times forward earnings, and a 4.5% yield.
Yeah.
I look at earnings, I see where everybody kind of manipulates earnings or whatever. They're selling off a lot of business, but as they're selling off these businesses, yes, these are one-offs, but the more businesses that they sell, the more that they're getting out of their old shit and putting it into their new stuff. And that's what you need to understand.
Yeah.
And sure, that's a one-time, it's a one-off. Well, that one-off business they just sold for whatever billions of dollars was a 15-cent, 20-cent drag on earnings.
Right.
That's what you have to focus on. So...
Well, and the joke there is that they have, you have a ton of non-reoccurring or one items every single quarter. That's the joke that they get beat up on. I know what you're saying, though. Yeah.
I mean, but now, especially IBM, the transition, it took 50 years. I get it. I understand. People say the revenue hasn't grown in 10 years, but earnings was skyrocketing, right? That's what you care about.
Yeah.
And the reason why sales weren't growing is because, the cost for servers and the old legacy business. I mean, it's... if you're paying $10 billion and getting a $10.5 billion profit, those profits are really, tiny.
Yeah.
But if you have a $3 billion business, so you generate $3 billion in sales and your profits are $1 billion, your revenues are going to go down, but your earnings are going to go up.
Right.
As a business, you're taking that 100% of the time, right? So that's why you saw revenues come down. Now you're seeing revenues expected to grow finally, which is, I don't know why people look at the IBM. Again, it's you might not like it here, but man, if you're shorting, I think you're nuts. I think you're crazy if you short the stock here. And
yeah, I definitely wouldn't short it just to have fun with the timestamp thing that we were talking about earlier. This is a good. When I saw that report, I was like, man, those are decent numbers. The Red Hat acquisition is obviously paying off or going in the right direction. Mm-hmm. I felt like we could say, hey, I don't think it's dead money anymore because you pull up a 5-year chart, it was basically 150, it popped to almost 180, and now. It's 140 today, and that's 5 years.
Yeah.
So you could argue, well, you've been holding the dividend the whole time and all that. Yeah, that's fine. But my point is that it just feels like it's getting past that dead money. So we'll see what the next quarters bring and if they can continue. But I thought it was very good for them. I thought that was the best in a while, and always enjoy seeing still the critics point out their GAAP and non-GAAP accounting and stuff. But we'll see how Big Blue does.
And also, Daniel, just bringing up that point, last thing here is, one of the hardest things is to forget the past, because you can look at so many companies, and we recommended a great company that I hated, and I used to make fun of every time I went to
Don't have hate in your heart, Frank.
I'm not going to give it away. And then I saw it. They changed the business model. Earnings are ramping higher. Great management team now. And I'm like, hey, listen, I hated this. You have to take a fresh look. IBM, taking a fresh look at it now. Yes, they sucked before. Yes, they got their ass kicked by everybody else. And they're getting their lunch eaten by everybody else. I get it. try to forget about the past, because that's when you could buy very cheap stocks that everybody hates. And then when IBM's 200 and everybody loves it, and there's a company that has a market cap. What's the market cap? You have it up there? What is it, like 130 billion?
Just through that. You're talking
IBM. I mean, you're looking at a market cap that's.
I think it's more than that.
Is it more?
No, 125.
All right, so it's 125 billion, and you're looking at their competitors trillions. I mean, these guys could easily double and still be, just take a little bit of market share. But that's what you really have to look at, because once this thing goes to 200, everyone's like, IBM's back. This is great. Well, you know what? These numbers are here now. And if they report another quarter like this, you're going to see Wall Street change their sentiment. And that dividend is really, really important. People love that. A 4.5% yield is perfectly safe. I hate the fact that they have that dividend. I wish they'd get rid of it, or not get rid of it, but bring it down to 2% and put more of those billions into growing cloud. But that's going to be very attractive in a low interest rate environment. So, good for them, man. They put up good numbers. Good for them. Yeah,
absolutely. Like I said, going forward from here, it'll be interesting to watch them. That was a little bit of a turning point from, like I said, dead money to, hey, this could actually be a mover and be a solid setup.
Yeah. All right. So, Daniel, listen, thanks for joining us, buddy. We like covering the current topics. It's going to be really crazy, guys. It's going to be a lot of fun over the next couple of weeks. I love earnings season. A lot of stuff coming out. You see reports from us. So it'll be really cool.